SUGP Group Holdings Ltd, SUGP, is trending across trading forums and social platforms as investors zero in on a rare and potentially volatile setup defined by an ultra low share float and significant short interest. This combination has sparked intense speculation about the possibility of a short squeeze, with many traders noting that even modest buying pressure could have an outsized impact on price due to the limited number of shares available for trading. Community sentiment is increasingly bullish, with participants drawing parallels to past high volatility stocks that experienced rapid, multi day runs once shorts were forced to cover. Adding to this narrative is the stock's reportedly high cost to borrow, which traders interpret as a sign of mounting pressure on short sellers and reduced flexibility for maintaining bearish positions. As a result, SUGP has become a focal point for momentum oriented strategies and short term speculative positioning. Looking ahead, anticipation is building around upcoming earnings and the potential for new contract announcements, both of which are widely viewed as near term catalysts that could validate the bullish thesis. Traders are closely monitoring technical levels, particularly key resistance zones, with many suggesting that a decisive breakout could trigger increased volume, accelerated price discovery, and heightened volatility. While some community members caution about the risks inherent in low float names, overall discussion remains highly charged as SUGP sits at the center of a rapidly evolving speculative narrative.
Okay, yesterday, the 16th of January 2026, the stock was down fractionally, lost 1.8%. So the stock is consolidating within a longer term neutral trend. Okay, and it seems all of its moving averages are strong, just bullish. All of them are, yeah, all of them are bullish in all the moving averages. You can see what we have here: 10-day moving average, 20-day moving average. These values, as far as they are above, as far as they are positive, they are, it just it's in the it might, okay, well, as far as they are above 2.0.25, it indicates they are trending. So you can see in the short term, short, intermediate, and medium term trend, the stock is strongly bullish. But on in the long term, it's just neutral, pretty much neutral. So positions opened all the way back to 200 days ago, even though the stock has been consolidating for like a long time now. Yes, those positions are in profit. Positions opened 10 days ago are in profit. Okay. So as things stand right now, the extrapolation seems to be suggesting that it might maintain this weakness all the way towards the 27th of January. Then after that, we might get a bounce. Ultimately, it is what it's just indicating is that the consolidation will is expected to remain all towards the end of February. Projections are saying 6.9, 7.44, 7.77. Momentum is flat, not expected to pick up, but never say never. So we have been able to gather the data on this daily chart, and this is what we have. We've done it. We've brought it here to digest it on a Claude. Okay, so we've talked about this already. You can always pause and have it read. So the key insight: three shots. But yeah, the shorts, intermediate, and medium term moving averages are in strong trend mode, and the 200-day moving average is just neutral, just neutral. Okay, we also have the mid. It gives us a range of possible prices. They are all grouped in resistance and the support zones. So at the top of the grid, you have the RXT value. This is where the grid ends, and then you're at the bottom as well. You have the XST value where the grid stops as well. So the top and the bottom. So usually, what you get is that while the stock is advancing through to the upside through the resistance values, you may find out that profit taking may be occurring, and at the same time, you also find out that the stock may continue to advance. It may even break through the resistance and continue to expand. But in the midst of all of that, profit taking may still be occurring. On the support zone, you find out if it's plunging down, even from the resistance zone, and plunging towards the support zones. You may find out that yes, people may be getting ready to get back into the stock, but at the same time, you may find out that it may even go ahead and print even way lower prices. So this here, gives you the probabilities. You can always pause and read. Okay. Yeah, so we have what seems like a confluence: the 40-day moving average, the extrapolation of the 40-day moving average, and the three-day moving average. They seem to be projecting that there is a reasonable support around where it's currently trading right now, between 6.14 all the way towards 6.49. Okay, not a very, it's just a narrow, tight range, very tight range, very tight. So we have a trade setup here. This is not a recommendation at all. Okay, so it's a short-term trade setup, 3 to 7 days, momentum breakout play. Entry will be 6.7 to $6.8 on break above consolidation. Okay, and then alternative entry will be right around where it is right now. Okay, targets will be 6.9, not a huge premium to the current level, 6.9 to 6.2. And then second target will be 7.2 to 7.25, and then 7.44 to 7.5. Stop loss will be 6.35. Okay, yeah. Profitability is 58 to 62%. Catalysts, short squeeze mechanics, earnings slash contract news, volume expansion above 750 shares, 750,000 shares. Then you have the long-term setup, 2 to 4 weeks, mean reversion with squeeze overlay, entry strategy. Okay, accumulation zone will be between 6.2 and 6.4. This is where you have the 21 and the 10-day moving averages support cluster. Ideal entry will be 6.14 to 6.2 range if it pulls back to the 40-day moving average, and if it pulls back to the 40-day moving average. So your targets will be 7.2. That's the probability there. 7.75 to 7.8. The probability is there as well. And then the third one, 8.1, recent high retest. Okay, stop loss will be 5.85 below the S3 support. Okay, yeah. So your risk reward is there. Is that probability of profitability? You have that there, and yeah. Risk considerations: highly volatile, high volatility warning. Okay, 53.6, 536% borrow rate, and 71% short interest create extreme two-way risk. Yeah, it cuts both ways. Yeah, it might expand massively to your benefit, but it may also crash disastrously. So the ppm 200 divergence, negative first derivative suggests a long-term downtrend resistance at 6.79. Okay, gap risk: low float stocks can gap violently in either direction. Okay, we've mentioned that already. Okay, size appropriately, use 25 to 50% of normal position size given volatility profile. Optimal strategy: layer entries, scale profits aggressively, and maintain strict stop discipline. Okay, and much more. Yeah, so the stock was trending at some point yesterday. Okay, so see what you make of all of this, and thank you very much for watching this video.